Ethereum has quickly become the second largest cryptocurrency in the world. On top of that, it is the largest, most well-established, open-ended, decentralized software platform. In this video, I'll be breaking down why Ethereum is so valuable and the exciting, bullish news that just came out about Ethereum. Let's get started. To better understand why Ethereum is so valuable, we have to separate and analyze the two components that make up Ethereum. First, there is Ether, which is the cryptocurrency that powers the Ethereum network. Ether is technically what you're purchasing when you buy Ethereum. The second component is the Ethereum network itself. The Ethereum network is a blockchain network that operates as a decentralized public ledger for verifying and recording transactions. The network's users can create, publish, monetize, and use applications on the platform or just send money to each other, all using Ether as a payment. See, Ethereum, unlike Bitcoin, represents more than a store of value. When you invest in Ethereum, you're betting on the value of both Ether and the Ethereum network. With these two components separated from each other, let's evaluate what makes them valuable independently first, then we'll talk about their combined value. First, let's talk about Ether. It's the native currency of the Ethereum network, and all transactions that occur on the network require the use of Ether. We're going to quickly run through 5 main ways that Ether currency derives its value. First would be the fact that it is used to pay Ethereum transaction fees, also known as gas fees. Every time a developer wants to create a new token or decentralized app on the network, they have to pay a gas fee for the right to use the system. This is also the case for two individuals that want to send money to each other over the network. It's kind of like paying your bus fare in order to ride the bus, and it is the only currency that can be used to pay these gas fees on the Ethereum network. As more and more developers and other users of the network look to create apps or send transactions on Ethereum, they must pay gas fees, which in turn increases Ether's price. The second way Ether gets its value is from its ability to be used as collateral. You may be thinking,
why wouldn't I just take out a loan?
But the amount of money you could be saving by borrowing against your Ether as opposed to borrowing from a bank is insane. Right now on open finance apps like Compound, you can borrow money at an interest rate of around 3%. To give that number some context, just take a look at the average personal loan rates given to borrowers from banks. Depending on how much you're planning to borrow and how much Ether you have, it could save you thousands of dollars. Third, you can lend and stake Ether. If you own Ether, you can go to a site like BlockFi or Celsius and open up an interest account. What these companies do is use your money to loan crypto out to borrowers at a higher interest rate. They then pay you a monthly interest payment in Ether in return for allowing them to use your Ether to lend to others. I personally use BlockFi, and the current annual interest percentage is 4% if you hold under 5 Ether. So for example, last month, I made about $13 in Ether just from holding a little over 2 Ether in my BlockFi. And with the recent bull run, I'm actually on pace to earn around $20 worth of Ether in August. Now these obviously aren't life-changing numbers, but they do add up over time. And when compared to earning 0.5% on a savings account, it's a no-brainer. Not to mention, if you're buying Ether, you're probably expecting it to appreciate over time. The other way for users to leverage Ether for passive income is staking. Staking your Ether involves depositing your crypto and contributing to the proof-of-stake network. After the Ethereum 2.0 upgrade in a few months, the entire Ethereum blockchain will run on a proof-of-stake model. This secures and decentralizes the blockchain by having multiple sources validate the transactions and create new blocks. To have this process run smoothly, Ether has to be staked. If you have 32 Ether, you are able to become what is called a validator and stake directly with Ethereum. The returns on the stake are reported to range from 4.6 to 10.3% annually, paid on a monthly basis in Ether. Total daily validator rewards went from $200,000 in December 2020 to $3 million in May. Now, if you're like most people and don't have 32 Ether, you have to become part of what's called a stake pool. Companies like Coinbase are tapping into this by coming out with staking options that were reported to offer a 5% yield on Ether, which is a very healthy percentage. You can also look at companies like Lido, who are currently offering 5.5% for Ether staking. By moving to proof of stake, Ether is looking to compete with Cardano, which started its foundation running on proof of stake. For example, right now, I'm able to use a Cardano wallet like Yoroi, deposit my ADA, and join a staking pool to begin earning ADA rewards. As you can see here, percentage returns in the most popular pools hover between 4 and 6%. Once you select a pool, you can see your reward schedule to get a better understanding when your rewards are going to be distributed. It's also really easy to forget just how quickly how many companies adopted Ethereum as a payment method. Companies like Overstock and Shopify allow payments to be made in Ether. You can also book hotels or flights with Ether on sites like Cheapair or Tripio. Another option that's easy to forget is a site like eGifter, which lets you buy gift cards from over 300 brands, including Amazon, using Ether. If you are at all interested in buying NFTs or other collectibles, Ether is going to be your currency of choice. Because right now, a majority of NFTs are Ethereum-based tokens, meaning you would need Ether to purchase them. This gives the currency additional value because for the foreseeable future, it will remain the preferred cryptocurrency for NFTs. With Ether out of the way, let's dive into the 3 reasons why the Ethereum network itself is so valuable. Then we'll bring it all together and talk about the recent Ethereum news. The first reason is that the Ethereum network is incredibly secure. The chances of fraud, downtime, or third-party interference is incredibly slim because of the way the Ethereum blockchains and other blockchains are set up. An enormous amount of computing power is contributed by all of the computers in the network, which together verifies and secures every transaction, making it nearly impossible for a third party to interfere with the network. Second, the Ethereum network has its own customizable programming language. This means that developers can manipulate code to make certain actions based on specific time-based or action-based parameters. For example, sending an automatic payment on a certain day each month. This native programming language runs on the Ethereum blockchain, which enables developers to run distributed applications. For this reason, more and more developers are being attracted to the network. The ability to run these distributed applications allows the public access to things like decentralized finance apps or DeFi apps, which is the third value driver for the Ethereum network. I've heard the Ethereum network compared to a smartphone before, where developers build apps on smartphones for users, just how developers can build DeFi apps on the Ethereum network for users. DeFi apps all have different capabilities, ranging from allowing people to lend, borrow, trade, insure, and earn interest on crypto. But the goal in general is to empower people to take actions financially without having to go through a bank. By eliminating the need for a third party, it creates a unique environment that allows for flexibility, and this is attracting a lot of users to these DeFi apps. An example of one would be the DeFi app called Lend.it. This app allows users to engage in decentralized peer-to-peer lending, which connects lenders to borrowers without the need for a bank. There are hundreds of decentralized apps out there, and only more are coming to the Ethereum network over time, which in turn should attract additional users. Having the Ethereum network combined with Ether as its fuel makes Ethereum a very interesting investment. The 1-2 punch of value that these two provide together creates a network effect of growth. Developers come to the network because of its flexible programming language. They pay gas fees to build these apps, which increases the price of Ethereum. As more developers succeed, more developers come to the network, and the demand for both the network and the Ether currency itself increases. But this demand cycle also exists on the user side. If someone wants to use a DeFi app, they have to purchase or own Ethereum. If someone wants to earn additional interest by lending Ethereum, they have to buy and hold Ethereum. If someone is looking to buy an NFT or get a better interest rate on a loan using Ethereum as collateral, they have to own Ethereum. It's been pretty clear over the last 2 years that this network effect is starting to take hold. If we look at the history of DeFi, the company MakerDAO is commonly known as the first DeFi app to receive significant use. It allows users to borrow money in its native token, DAI, which is pegged to the US dollar. MakerDAO was founded in 2017 and didn't gain significant adoption until 2019. Then in 2020, platforms like Compound and others began offering interest payments to crypto lenders via a compound account using their native token, COMP. Shortly after that in 2020, other platforms began offering similar accounts. Fast forward to 2021 and your grandma could figure out how to open a crypto lending account. Companies like BlockFi, Celsius, and Etoro have expanded beyond trading and now offer crypto lending platforms along with staking options that offer ways for anyone who owns Ethereum to earn interest. Now, if we compare this timeline of late 2019 to 2021 against a chart that shows the total number of active wallet addresses for Ethereum, it gets really interesting. These active wallet addresses represent the number of active people using Ether, and it's a good way to gauge adoption over a long period of time. We can see here that during this same time period of late 2019 to 2021, we can see Ethereum wallet growth saw the longest and highest growth period ever. We can also see that in July of 2021, Ethereum passed Bitcoin in the number of active wallets and now has a little over 50,000 wallet lead against Bitcoin. It's safe to say that a lot of this growth is coming from the influence and adoption of DeFi apps and the demand for Ether and the Ethereum network. To put this growth into perspective, let's take a look at transaction fees over that same time period and compare Ethereum and Bitcoin. In 2019, Bitcoin transaction fees totaled $135 million through September, while Ethereum's totaled $27 million through that same time period. A year later, in September of 2020, Ethereum passed $350 million, while Bitcoin was still roughly half of that. Ethereum then went on to pass over $500 million in cumulative fees in 2020. So let's quickly wrap up with the super exciting news that just came out about Ethereum. A major change is coming to how Ethereum is developed. On August 5th, they released EIP 1559, which introduced a monetary policy change to Ethereum. Up until this point, fees users paid were going to miners, but after this upgrade, the fees are instead burned and gone forever. Combining this with the EIP 3675 upgrade, which switches the network to proof of stake and is coming in a few months, Ethereum will begin to become deflationary. This means that the number of coins in existence will begin to decrease. After this update, Ethereum will become sound money, meaning that it is relatively stable. But what is even more exciting is that Ethereum has the potential to become ultrasound money because there is no supply floor, making it deflationary since supply could go negative. This is expected to bring even more value to Ethereum and increase its price over time. The future is clear in terms of Ethereum's potential value and trajectory, but it's still important to consider government interference and other competitors. The DeFi world, although well funded, is still very new and a lot can happen over the course of the next 5 to 10 years. Competitors like Cardano and Polkadot pose risk, but Ethereum is guarded by a long head start in the market. But if Ethereum can keep providing value to more and more developers and users while fending off regulation and competitors, it should appreciate substantially over time and benefit from deflationary pressure. Really appreciate you watching until the end. If you're catching this before the end of August, make sure to check out this video where I walk through the top 6 stocks to buy in August of 2021. Click on that and we'll see you over there.